oil is half where it was this time last year.
Half the price.
It was more 80. It was above 80. Sorry, Stuart.
No. That's a good thing. I think that's an indicator for the stock market. When oil tumbles like that, down goes the market. Yesterday. We're off only 32 points, 17.5 in the very early going this Tuesday morning. I want to start individual stocks. Got a couple of them to mention. UPS, higher profits, but sales down. Now, you could say that is an economic indicator, and the stock is down, by the way. And look who's here to comment on all of this. Ashley Webster, Liz McDonald, Todd Horwitz, and Mike Murphy. All right, Todd, to you first. I'm intrigued about this break in the price of oil. We're down to $42 a barrel, and I'm saying maybe stocks follow. Why is the price of oil down at this low level today?
Good morning, Stuart. I think the first reason it's down is it broke that support level at 44. There's a lot of pressure on the markets right now, and there's a lot of pressure overall waiting to see. Tomorrow we have the report from the House of Illusionists that perform all the magic in the market. So we're going to see what they actually do, and I think oil's a little bit concerned as well as the markets. But really, we broke support. They're going to take it down a little bit here. It'll find some support, and if the growth is as good as we think it is, or they keep telling us it is, then oil should probably rebound fairly quickly here. Okay, Mike, you're not an oil analyst, but I'm saying that oil, when it points down, it points the stock market down.
No? It can. Not necessarily. If you look at the correlation there, it's not completely in that range. But lately, that has been what's happening. As oil goes lower, the market goes lower. But why is oil going lower, Stuart? Oil's going lower because of economic weakness. So economic weakness, the market goes lower. But I agree with Todd. We're down in the low end of our range right now in oil, around the $42 a barrel level. And last time we were down here a few months ago, remember, it didn't take us long to snap right back up into the $48, $49 level. So if you like energy names right now and you like the big dividends that they give you, I think you can start stepping in here.
I still think there's a huge glut of oil. World economy is slowing down. China's printing money. The Europeans are hinting of printing more money. I think oil reflects where we are. And, of course, the glut of oil doesn't help. It's also putting downward pressure.
And it's a rotten durable goods orders report this morning. I don't want to get technical, but that's an economic indicator that points this economy really slowing down. That was a dreadful report.
Does it feel good in advance of the Christmas season if durable goods are right?
And UPS, not good either. What's Todd laughing at? I heard that there, Horwitz. What are you laughing at?
I keep hearing reports on how good and the growth and everything is going wonderful, yet the core companies that you would look after to say, are we really doing well, are not doing well, and I can't see the exuberance over what a great economy we have here because you've got everybody in the world fighting with their currencies trying to reduce everything.
You got that right, Todd.
It's not logical.
You said it before and you'll say it again. All right, individual stocks, UPS now down 2.5%, 103 on UPS. Take a look, please, at Alibaba. We call them the Chinese Amazon. Listen to this. Sales up more than 30%. What does that say about the Chinese economy? I don't know, but sales up 30%, the stock's up 7%. Yeah. Mike, what do you say about that?
I think that all the concern over in China is real, but you look at it, maybe we're a little bit too concerned. We're still looking at GDP growth over there in the high 6 to 7% range. Alibaba came out with these earnings, and it looks like the consumer over in China is spending money, similar to what we saw from Amazon here in the U.S. last week. So I think the bar has been set so low over in China. Now you see what came out of the consumer over there. Maybe things aren't as bad as we have been led to believe.
It's the online consumer. Not just the man or woman in the street who goes into a department store. This is the online consumer.
It's online, but also remember, Alibaba has set up a lot of retail outlets over in China, and that's where they saw the real growth, Stuart.
He's
inside
got an
those retail
stores. This guy it really drives me crazy. Take a look at the Ford Motor Company, please. Disappointing profits. I believe that stock is down this morning. 15 on Ford. 4% lower. Would you buy it, Mike Murphy?
I own it. I would buy it on this pullback. Ford put up the greatest quarter that they've ever put up. They have sales are up 89% year over year.
So why is it down at 4%?
The stock's down because they missed earnings estimates by a penny. But this is still a company that's growing massively. And remember, Stuart, they have a new F-150 that cost them a lot of money to put out an aluminum F-150. This is their best sales vehicle.
Is it selling?
So it's selling like hotcakes. And they have a top-level model that sells for over $60,000.
So you buy some more of it.
Buy Ford here, 4% dividend.
How about Coach? I call that kind of democratic, reachable luxury. Profit and sales down. Nicole, come in, please, because I think the stock is up, and you're going to tell me why.
All right, the stock is up about over 8%. That's a great move to the upside. Why? Because it's not as bad as it has been for the last 2 years. 9 quarters of same-store sales declines. The latest number, 9.5% decline in North America, not as bad as the previous quarters.
Wow, that's incredible. The sales go down 9% and the stock goes up 8%.
And that's a good number, and they're refreshing the stores and trying to take market share, and they have a turnaround plan.
Okay, quickly, Grubhub.
Next.
I know I don't know who's chucking paper at you, but I know the stock is down, Nicole, down 26%. You got any reason for that?
Okay, now that's a huge move. This is a new all-time low. This was an IPO back in early 2014. Grubhub is seamless. You order, you get online, you order your food. Everything looks good here except that they missed the numbers, and that's what it is. Their earnings growth, they have new diners up 41% year over year, growth in the orders. That all looks great, but they missed the numbers and cut their outlook.
You know, this expectation nonsense is driving me up the wall, Murphy.
Yes, absolutely. Yeah. That's why you got to be careful. You don't want to be trading on every news piece that comes out. You have a position like a Microsoft. You buy it, you wait for great news, and you ride out the story.
You know, some of us have waited 15 years for great news. I got it. All right.
Maybe.
All right. Time to take a look at Apple, please. As you know, it reports profits after the bell today, after 4 o'clock Eastern. Now, we don't usually walk up these earnings reports, but this is so big, we thought we'd show you the stock.
Looking for $1.88.
What are you going to say?
$1.88 on earnings.
Oh, that's
per
the
share.
expectations.
That's the expectations. Come on. Well, that's the one they trade on. The big issue is how many iPhones did they sell? How well did they do in China? And
look, that's a contrived number.
Of course it is.
The analysts,
but they have to have something to bear the standard.
It's $1.88. They know that's low, so they can beat
They sandbag the market every time. We know that. They beat every time. The real truth of the matter is forward guidance. They got the big holiday season coming up. How many iPhones can they sell?
You know, you're right. What do you got to say?
$200 billion in cash. What are they going to do with that money? How do they get some of that overseas money back here to
Future
the
growth.
US?
Where's it coming from?
By Netflix. Very funny. Don't start off.
No,
Sorry.
Twitter. Now, there's another big name that you know, and it too comes out after the closing bell today. Twitter all the way up at 31 today, Liz.
First report under the official CEO, Jack Dorsey, finally taking the seat there. They're looking, Twitter's in a world of pain, down 17%, worse than the S&P. They're looking for a nickel a share. They're looking for revenues to grow more than 50%. Still nothing to tweet home about. It's all about user growth. RBC Capital Markets only expecting just 7 million new users at Twitter, adding to the base there.
Only 7 million. Only 7 million.
But they're still below Instagram, and they're still below Snapchat and WhatsApp.
Only 7 million.
Yeah, only 7 million.
It's awful. Pathetic. By the way, tune in at 4 o'clock Eastern Time. You'll get the Apple and Twitter numbers as they break. How about oil? Got to look at that again, please. The U.S. plans to sell down some of the Strategic Petroleum Reserve. That is to raise cash, apparently. So oil's down at $42 a barrel right now. Todd, come back, please. What do you make of the Strategic Petroleum Reserve? We're selling part of it. What do you make of that?
Well, I think that what we're saying is we've got so much oil and we have the ability to produce so much oil here that in 4 or 5 years we can be, if we want, we can be totally independent from the rest of the world and create everything here. We don't need anybody else to do it. So I think that if we're willing to drill it, if we're willing to go get it, then we don't really need the strategic reserve anymore. So they might as well take the cash now while they can get it.
Okay, I say it's going to $39 a barrel and gasoline will be under $2 by Christmas. But I digress. What do you got to say?
I think if oil does go to $39 a barrel, big, large oil companies out there are not going to be shocked by that number. They've already come to expect oil down here. They can profit with oil down here. So I think there's opportunity.
All right.